All right, good afternoon. Let's do an end of day review for today. Today is Friday, September 1st, 2023. It's the very first trading of the month of September. Excuse me. So we have two wonderful trades this morning. We take a practice day. We already took the trade yesterday. So let's review those trades. And here's the trade that we took this morning. Well, the trade is on the 1 minute time frame, and we entry at 9:33 and the target at 9:38. So is that right? Is that only 5 minutes? Let me see. Yeah, only 5 minutes. You see, 1, 2, 3, 4, 5. I mean, if our target right here, just $1 move, we end for $1 move, but we let it go for the private swing low right here. Let's see when it reach that. Okay. So we have some very wonderful observation when the very valuable. So the short setup on the Friday first, and one thing I want to always keep in mind, for the Friday we always have the open high close play, you know, for the weekend candle. So basically, if you see that in the pre-market it make the new high or the high of the week, you know that at open it's gonna be go down, right? That's the nature of the algo right there, because it's not gonna close at the high, it's gonna close at just below the high right there. So that means we know that the short setup at the open will present to us, and we see that it's sort of, you know, present in the first 5 minutes right there. Let's put one more thing right here. Friday, Friday is what? When we know when it is Friday, so let's say when it is Friday, then what? Then so-called open, high, close, open, high, low, close. Pattern, you can say that, is in play. Right, basically we're going to apply this strategy in the Friday, right? That's the idea. We always keep that in mind when we trade on Friday. Highlight it, and we know that if we look to see the short up on the first 5 minutes, then if from the first minute, then we know that exactly where to go. And another factor, we see that the gap between the open at 9 and 9:30 very narrow, and the entry location or retest just above, you know, that gap right there, and we can see that it's very clean move. It's very low resistance, liquidity run right there, and we have a good risk reward ratio, 1:6, right? So if we want to get out of 38, $1 move, then that's fine. But if we want for another 3 minutes, it will hit the sell side liquidity right there. Let's see what is this. Yeah, so this sales liquidity, that's what we're gonna hit, and we got $1.54 right there. Right, we either get our $1 move, or we wait until it's hit this sales liquidity, we can get out. Yeah, so we have a good risk reward ratio right there. 1.6. Yeah, let's double check this number real quick. I believe it's 1.6. So basically you have $1. Yeah, more than 1.6. If you go with a next target, let's go with conservatively, right? 0, 4, 2. Yeah, 1 to 2. Oh, so where's 1 to 6 come from? So $1.23 divide for 2, you have almost 1 to 3 risk reward ratio. And then if you have $54 divided by 142, then you have 1 to 3 or 1 to 2 risk reward ratio. Okay, let's see where we get the 1 to 6 risk reward ratio come from. 42. Yeah, 1 to 3, not 1 to 6. Yeah, we need to fix that. I think the reason why we want to go to 6, because if we let it run on the high time frame, right, then if we reach that, let's go to the chart and we will see the reason. Yeah, so if we let it run, no, we have to get out of here. That's right, we need to get out because it's gonna pull back. So it's 1 to 3 risk reward ratio right now. You see, at least it come back to the London section to retest the London high right there. Yep, so we need to fix that. One, two, three, risk reward ratio, and this is a very easy trade low setup for it right there. Actually, hold on. Actually, I want to see. Yeah, we're coming right here, but if we let it go right there, right, then we can have a very low risk right there. But anyway, this trade is wonderful. It's easy trade right there. And as soon as it take out the liquidity, we get out and we want to see how it moves. Basically, it's gonna move, you know, a retracement and then continue to go down. Okay, let's see what our node, what else we have in here. Yes, we move. And after we get out, we take a second trade, which is the retest right there. So we take 2 short trades right there for today. Okay, right here we enter exactly around 22. Yes, and just the same setup right here for this auto block, right? You can And also for this, for this auto block right here, you see auto flag up and retest the auto block, and confluent right here you also have a barrier breaker and the displacement flag up and retest right there. So I put both in there, and I think I misspelled right here. When I rewatched the tape, I saw the misspell, right? So just remember this misspell. So we have the condition buy sell agreement was taken, right? All the buy sell agreement in the short term right there, and it's make the new high of the week, and like we say, it's Friday, so it's gonna be it's not gonna close as the high. It's gonna close behind the high, below the high, without the high of the week, right? And especially the high of the week right there. So it's just grab the buy sell agreement. He's just very accurate. You see, it did 1 cent above this guy. That's how the algorithm. So we put our stop loss 5 cents above this one when we do the short right here, and we stay in the trade. Yeah, let's put that right here. So our stop loss, we have to say the high of week, right? And I'll go 5 cents above the high week, and I'll go, just 1 cent above this one. That's amazing. It's very accurate right there. So accurate. Very detailed, just 1 cent above, but we would 5 cents, so we stay in the trade anyway. So that's our lesson learned right there. And what else we are doing? Okay, for this setup, right, the entries, and this one we have a bigger risk reward ratio, because we wait when it close to our stop loss. So the best entry is the entry that near the stop loss. So you have to wait, patient wait. Don't feel mixing out. If it not run to your near your stop loss, then don't entry, because you want to go with a low risk, right? That's the lesson. And see what we do right here. We have entry time is 10:22, and then we are target this sell salary for sure. It's gonna grab, and let's see how it's play out. So we have an if condition right there. So if we move our stop loss to break even at 10:29, if we not move, then our target will hit right there. So let's see, what do we take a swing out right here. So basically we go in right here, this candle, all right, and then when it moved down, if we move our stop loss break even, then we got hit out by this huge up close candle at 29 right there. So if we move it, we got to stop out. That's out no right there. But if we not move, then we have huge profit right here. You see, our profit is the source of the weekend. We got 10.54 right there. And let's see how much we gain. So yeah, we gain $1.66. So it's a good trade right there, because we enter the trade as close as stop loss as possible. Okay, and one thing we learn. Okay, that's the lesson learned. From now onward, no more moving stop loss. Why? Because when we move stop loss, we act our fear, and we cannot act our fear. We can. we have to stick to our rule, our game. Because when we act our fear, the fear completely take over and control it. We have to feel the pain, to feel the volatile up and down. We have to feel that. Don't be afraid. I mean, feel, all the words they say, feel, face your fear. And if it lost, it's lost. Don't afraid to take loss. So from now on, just stick to our stop loss. If it lost, it lost. We learn from that. We're not gonna act our fear. That's the idea we need to, that's the psychology lesson we learned. Very valuable right there. The same thing happened to us yesterday when we move our stop loss, and we cannot take the uncomfort moment. We move the break to break even, and we got stop out. We move our stop loss, and we got stop out. Yeah, let's review that. I think it's very valuable lesson for us. Let's open the journal for yesterday. So yesterday, Thursday, right? And we took the trade, we moved stop loss right there. You see? So the lesson learned for us that right to energy evolution, wait for nearly an inch down. Patient, no FOMO. If not move start, the gain will be $2 right there. We move our stop loss. So that's the lesson we have to, we see, that's the same idea. So if today we move our stop loss, we will run into the same problem. Okay, so we move our stop loss and we got hit right here. We have supposed to keep our stop loss up here, and we move. Let's see what else on. Yeah, right here. Yeah, so you remember we go in and we will stop loss right here. We move our stop loss supposed to be here, and then we move down here. And when we move down here, we get caught up with this manipulation move right here. This is the manipulation move. It tries to take all the buy seller liquidity. It's not gonna reach this level because they have order block right here. They already marked this. As soon as the algo hit level, it automatically reverses because they leave this furniture right here. They leave the marker right there. That's how the algo is well programmed. So at a description, or I mean the discretion trader, we have to pay attention to this manipulation move right there. This move is the move try to kick all the people short right here out before it go down without them. So that's the idea right there. So we learn our lesson. We have to put the stop loss exactly right here, 5 cents above this level, and take the lot if that's the case. No fear, because when we move our stop loss, that means we act our fear. Why move our stop loss? Before we are fear that we may get lost, take break. So we want to get at least break even. Come on, get off that mindset. You either lost or win. That's it. Don't play with don't trade with a break even mindset, because you have to let your setup play out. Otherwise it messes up your probability, your win rate right there. You have to let it play out, and then from there you can improve. Like yesterday, if we are leave the stop loss right here, we have a huge swing, $2. Eventually it go down, we give it $2 right there. The same lesson we learned for today. We should not move our stop loss. Never again. Understand that? You see, a bigger move right there. That's the note we take. You see, we hit our target right here, 1.5 standard deviation move. Right here is the manipulation move right there. If we leave after got above here, then we are in a push position right there. Okay, so I think I just want to emphasize the idea that never again move our stop loss. If we hit our stop loss, this is we already predefine our stop loss, then let it play out. You know, and if it go again our, you know, if it go again our position, then take it. Feel the pain. It's not bad at all. And if it lost, take the loss and turn it into opportunities for growth instead of afraid take a loss and then in the hit at the moment move out stop loss, and then it end up a very huge winning. So that's our decision right there. No more moving stop loss. Okay, so go back to, yeah, that's 2 short trade we do. Okay, and one more thing, 2 more things, right? We see that the move right here is so clean. The first short trade we take is so clean move, and that's the move that we are try to target, try to capitalize on that move. It's just about less than 10 minutes you make $1, more than $1 right there. $1 right here, very clean move. What $1.54, right? And you know, like 8 minutes. Look at that, the duration, just 8 minutes, only 8 minutes, and you get $1.54. So it's just easy trade. That's our M for easy trade. If it stop our if we got an idea, and if the idea turned out to be not correct, then we out of the trade instantly. And if we get it right, then we also get a profit instantly right there. That's the easy trade right there. That's what we aim for. So we go in at 33, and then it hit 41. So 33, 41. Yeah, only 8 minutes. Look at that trade right there. See that? Here, boom, hit the target. You know, right here. Take sell side away. A little candle, or you less one more candle right here. Okay, and look at it. I want us to go through this because it's very critical, and we start see this pattern more and more. And our job is trying to identify it in real time so we can capitalize that. Right now we identify this in the after this happened, maybe 10 minutes or 15 minutes after it happened, we start realize that. So our goal is to close these gaps. And how do we do that? We just practice. That's it, just practice. Train our eye and wire our brain to recognize this pattern. and practice, we give it the confidence to take the trade, take the setup when it show up at all. Easy setup right there. So you see that when we watch this in real time, right? You see that this is the market structure shift right here, because all of this is the a higher low, but this one make a lower low, and then it make another lower low. So it's confirmation for you right there. It's a market structure shift and a confirmation. Okay, some people call this is two leg down, but here's the trick. You're not gonna go in and short right away. Okay, you wait for it to retracement. You see, if retracement, it take it take the buy side liquidity, and then one more retracement take buy side liquidity, all buy side liquidity, and right here we thought, wow, we're gonna go and short this one. I remember when it happened in real time, my first instant, oh wow, it did take the buy side. A good time to go short now, because it's also reached into this bearish breaker right there. However, right after that, it's supposed to go down, right? But all of a sudden, it went up, and you see all of this up close candle continually 1, 2, 3, 4, 5, 6, 7, 8 candle up right there in 8 minutes. You know that that's something going on right there. That is the manipulation move. That is the sell side liquidity trap. It want to trap the sell side. It want to what? Because the smart money, they want to sell, right? So they need all the people put the order right here to buy it, so they can sell. They can match that order. The stock exchange need to match between the buy and the sell, right? And the computer program that they use to run the stock exchange, the key function is to maximize, transaction, right? Maximize the transaction. In other words, it's seek liquidity, where the buyer and the seller need to meet each other so they can trigger a transaction right there. That's the beautiful right there. And when we identify the manipulation rule, we can measure the standard deviation. So it can go to one standard deviation right here. It reached one standard at, I think, 11:45, right? 11:45. Let's look at note. Yeah, it reached 2 standard deviation. I think it should be 1 or 2. Let's see. So we identify this is a right here. Oh no. Get the fifth for me, and then I can identify it. So basically 200 is a 1 standard deviation move, and 300 is 2 standard deviation move. Wow, yeah, that's right, 2 standard deviation move. So it is 2 standard deviation move. Yeah, 2 standard deviation move. That's, yeah, we got 2 standard at 11:45 right there. So we go in at 10 something, 10:45. We go in at 10. Yeah, we go in at 10:10 and 10:45. 11:45. Okay. Entry. This is a liquidity run analysis area. So this is the liquidity run analysis of what we try to say is 10:10. Okay, and we go back to look at that manipulation. If under the ICT concept, it fall into this setup that we are trade. Remember, right now we only trade two setup: auto block failure gap retest, and the other one is breaker failure gap retest. That's it. And this 1 hour time frame, but if we look on the 5-minute time frame, you can see it's so clear, so beautiful. This when you see this, you cannot unsee it. Look at that. Okay, so we have right here the auto block failure gap retest short setup. Buy side liquidity was taken. We can get the high of the week right there. So we take the high of the week right there. So it's, and then we know that it's Friday, so the open high low close in play, which is it's gonna be close below the high, right? And then you see the market structure shift and the confirmation right here. You have two leg down, right? Down one, down two. It's confirmed it's gonna go down. But before it goes down, it's gonna do this manipulation, the retracement, right into the order block and huge failure gap right here. It's right into that and took the trade at 10:10 right there. And our target is right here at 10:45. The target is just one standard deviation of the R model right here. You see the R model, one standard deviation right there. It's so accurate. I mean, it's like clockwork. You cannot mistaken when you see this kind of setup. So that's our goal right there. Easy trade. The best trade is the easy trade, the effortless trade, and we aim for that. See right there? Yeah, a two beautiful trade. Anyway, I think we are now up time, but I want to show one more thing real quick before we close this recording. Okay, I want to show you a 4-hour time frame. It's pretty much identical, like 1 hour time frame, but you can see, let's zoom out a little bit. You can see that short is the good thing for today. Sorry, let's zoom out one more time. Okay, so we know that this the gap, right, from daily time frame. We know there are huge volume gap right here. It needs to revisit, and it did. You see that? And you can also see right here, what is this? Is this the double top pattern right there? And your target gonna be the sell side liquidity right here when it start going down, and you just wait for the moment that it take the buy side liquidity of this candle, then you zoom in. That's exactly it happened this morning when in the 1 hour time frame, the short trade we take. We saw this, as soon as it take the buy side liquidity, boom, it going down. It take, the buy side liquidity, boom, it's down. Take the, it take the sell side liquidity from here, and also it retests this failure gap one more time. You see that? It retested yesterday, and now it goes out again to fill that failure gap. You see the bottom, almost the bottom of this failure gap. So basically, I say that in the 4-hour time frame is also a bearish setup for double top reduction. All right, one more thing. I remember that I last week or so I said that let me do a little bit coding right here to give a stack on the day. And you see on the daily time frame, right, we have this guy, we have about 30 years of data. So the average for each candle, for high and low is about $2, right? But in this, we want to see how many candles that have a high and low above $19. It did, and you see right here, it's very very interesting, right? So for 30 year, I think 30 year data, right? It's 1 year. Hold on, let's do this together so we know exactly, right? Okay, so 1 year, you have how many candles? 7704. So how many days you have for a year? 365, 262. But for a trading day, let's do a Google real quick. Right. How many trading day in a year? 252. So it less than, divide by 252 days. So basically they have 30 year of data right there, 30 year of data. And based on the 30 year of data, there are about 368 days where the move, the move from the high and the low above $19. That's a huge move right there, about 368 days. And look at this, I mean, really remarkable. You see, if you know this number, this stat, this statistic, it gives you some clue right here. So last year, October 14, we did 10-hour Thursday, right? You see the high and low distance right there, $19.04. Look at that. So special, right? That means the algorithm already set to reverse, because that's a huge move right there. And look at this candle also huge, but it's only about $7. But it says that this is gonna be a down move, and you see that right there, down move. And now it retests that. I believe that it's gonna go down. I believe it's gonna go down. This is gonna go down. At least it's gonna go down. Take this by celebrity, right? My anticipation is gonna take it by celebrity, or it's gonna be continue breakdown, or it's gonna be rebound. So the question is how it's gonna act around this area right there. All right, I think that's it for now. Have a nice weekend, and talk to you later. Thank you.